So I just made about $17,000 in 3 days trading Bitcoin, simply by understanding where all the newbie traders are placing their stops, which allowed me to take advantage of them and steal all of their money. So if you want to learn exactly how to do that, you're definitely going to want to stick around and watch this video. And also, if you could go ahead and smash that like button, I'd truly appreciate it. All right, guys, so let's get right into it. We're going to talk about basically three things mostly right now. And the first thing is going to be trap trading, which is understanding where do people place their stops, and then they think that's going to be the top or the area where they should have got out. Rather, what really happens is price just flips around and reverses very hard off that level, and they wonder what the hell just happened. Also, we're going to talk about the 2% rule, which is what I use to manage all my risk on every trade so I don't lose too much on any trade. We're also going to talk about how I exit in a grid so that ensures me making money even on a failed trade, such as the short that was actually a failed trade, but I still came out on top $1,700. So let's take a look at exactly what I'm talking about, starting off with trap trading. Now, typically, if you see some sort of peak in price action, you could draw a horizontal line across that area, and that would be, what we would call resistance, right? An area where if price broke out above resistance, we might think, okay, price is going to break out and see a huge move to the upside. But alternatively, what actually happens most of the time, and while a retail trader might call that a breakout and a push to the upside, and I'm going to buy up here for that move, what's actually going to happen is institutions are going to come dump on you right up in this area as soon as it breaks out over that level. And all of a sudden, you're going to see price ramp up into this level and all of a sudden flip very hard off that level and have a huge crash. This is what we call a buy-side liquidity trap, where everyone has their stops placed right around here, or where everyone who is short has their stop placed just above this high. And also a bunch of new retail traders are going to buy this breakout only for it to dump right here, and they're going to have a stop place right here. And as soon as their stop gets taken out, that just increases selling pressure to the downside. So what you have to understand is that this happens all the time. And this is basically how I took advantage of a bunch of noob traders out there and basically followed along with what most institutional traders are going to be doing. And so I was able to piggyback off what the institutions are doing for me to make money. All trading is just a transfer of wealth from people that don't know what they're doing to people that do know what they're doing. And only about 2% of people are actually making money out there. Now, this same strategy works on the downside. You see a low that happens, and as soon as price goes back down to this low, a lot of people who are long get stopped out, or people start shorting at this level thinking that we're just going to dump to the downside. Yet all that happens is if price swiftly moves back up above that level and then slingshots to the upside. This happens time and time again. This is what I would call a sell side liquidity trap, where a bunch of selling pressure happens, but rather it just rips to the upside. So let's just take a look at exactly how this actually plays out on the charts when we're looking at things such as Bitcoin. Now, if we look back at my Discord, which is the Wolfpack, if you want to join in there, I talk about all my trade alerts in there as well as my trade ideas. Now, on January 9th, I said I'm watching for a potential BTC short setup with the ETF news pending. It sounds like it's going to be a potential approval after Gary Gensler tweeted. Likely we spike into a potential trap over 48 to 50K and then sell the news before an actual pullback. So if we look at the actual chart there, you can see this was prior to it breaking out above this high, where there's going to be a bunch of people with stops above that level. But what's really going to happen is institutions are going to short in that level. They're also going to sell all their bags that they just made a bunch of money on in that level. But a bunch of retail traders out there are going to buy into this level, and they're also going to have the stops on their shorts above that level, which allows a bunch of volume for institutions to have exit liquidity. Okay, you don't want to become exit liquidity for the institutions. You want to follow along with what they're doing. And then what happened after this, right? Did price just continue to rip up because it broke out above that high and just ramp into 50K? Or did this create a trap and then a dump to the downside? Well, if we look at exactly what happened here, we can see price action right across that level. We had a buy side trap. What happened? Price just briefly spiked above that level and saw a huge dump to the downside. So we have a buy side liquidity trap where I didn't get my entry short there because it happened very fast and I actually was asleep during that time, but the exact pattern I was looking for played out. Now, the same pattern to the downside actually played out just shortly after. We had this big sell spike to the downside. Now, the lows here were tapped here, here, and here again. Now, we have an area where a lot of people are going to have their stops placed, okay? Now, this would be a sell side liquidity trap. Now, you can see as soon as price broke down below that level, it just spiked right back down kind of into the support area down here. But as soon as that got back above that level, Now that's a trap because a bunch of people probably sold this level going short and a bunch of longs just got stamped out on all their position right here. Look what happened. Prices slingshotted right back up into what's now is this pumping to the upside. We also have to talk about the velocity of these moves. Now, if we're looking, brief interruption here, guys, did you know that 75% of traders have accounts under $25,000? This creates a huge problem because even if you double that account in a year, which is almost impossible, you're still only making $25,000. Introducing Hydra funding, where you can potentially get access up to $500,000 in capital. All you have to do, guys, is sign up for a challenge account, which is going to give you potentially access up to $500,000. And if you earn a 10% profit in this demo account without going into a 5% loss overall or a 4% loss in a day, you will then pass their evaluation phase and yes, get access to an account with the selected size account. And now, instead of trying to double a $10,000 account, you could potentially earn only 10% on a $100,000 account to earn the same level of profits. And the benefits of this are huge. Rather than risking your entire $10,000 on one account, you can use just $1,000 to potentially get access to $100,000 in capital. You can trade crypto, forex, stocks, CFTs, gold, oil, everything under the sun, all on MT4 and MT5. If you're interested, if you have an account under $25,000, like 75% of traders out there, you're not going to make any money with that account because it's too small. Get access to pro level funding and pro level capital with Hydra funding. Link's going to be below. At the velocity of the move, okay? Now, if we had a spike right here, and then all of a sudden just a huge spike nonstop into that level, that is going to be a higher probability that this is a trap, okay? And that you can short that and make money on the downside here on that trap. But if you have a similar move where it spikes up here once, then comes back up here again, okay, maybe it does slightly trap right there and does see a little bit of a pullback. But if you start seeing it flagging and compressing in this level, that is reducing the probability that it's going to see some sort of dramatic downside selling pressure. This is going to create the potential for a now flag breakout to the upside, because a lot of people who are now short in this area that got short here, that got short here, they're going to have their stops placed somewhere right here. Now this creates a buying opportunity because the likelihood is becoming more in favor of the long side and we break out to the upside. So let's just talk about what happened in my actual trade here on Bitcoin for going short. That was actually a failed trade, but I still came out on top about $1,700. If we look at this peak right here on Bitcoin, after this first initial pullback, we now have an area after this big downside selling pressure that could be a trap, buy-side liquidity trap based on that high for a potential short and then see a downside move, okay? But prior to this actually happening, if we replay here, at this point, this is looking like a potential good short setup, okay? If we actually look at this from a standpoint of a 50% retracement on the actual move from top to bottom, we're right in that level at 50%, giving it the potential to be an opportunity to actually be going short. So what did I do? I prepared prior to this actually happening. I said in the Wolf Alerts Discord, ahead of that actually happening, that I'm potentially going short. And then I actually alerted the short here on January 30th, short Bitcoin, only risking 1%, not even the full 2%. My entry is 43,722. You can see this was the trade set up at that current time, looking for potential areas of profit here in T1, T2, and all the way down to T3. Now, this doesn't mean that this is what I think is going to happen. This just means that I think there's the probability of this scenario playing out. But as we just talked about in velocity trading, now, when we're first getting on that trap, what we want to see is a big push to the downside and heavy selling pressure. But that's not what happened. We didn't see this trap move that actually happened. What we saw was an actual trap with just a brief pullback, which actually pulled right into the degenerate trend, and then a flag pattern that formed up, and then a breakout to the upside. So what I actually did here on my actual trade, if we actually play this out, I got short here on that buy side liquidity trap. I exited in a grid here, here, and here, and then it never went any lower than that. So at this point, I'm thinking, okay, well, we're not seeing any sort of selling pressure down here. So we kind of have what is basically a swing low on this price action right here. So as long as this stays above this low right here, and this is flagging, compressing, and getting closer and closer to this resistance level here, it's more of a likelihood that a breakout is going to occur. So right before this actual breakout occurred, I locked in my gain on the short for about $1,700 and then flipped long on this position because I knew there's going to be a bunch of people that have their stops placed above this area. And if we break out, that's going to be a huge amount of buying pressure for a lot of people who are either short here that have to stop out of their position, but there's also going to be a bunch of retail traders that FOMO into this and spike to the upside. Now, I never chase a breakout. I don't buy into a breakout after it already occurs, which is why I got in the breakout down here prior to this actually happening. As you can see in the trade alerts here on Bitcoin, long BTC account risk, I'm risking 2%. So I got a little more aggressive on this on the long side due to the fact that we've been more prone to see big moves to the upside going long. 42,960, stop at 42,050 with my actual target range sell grid up to 46,000. That basically just means that I'm going to be locking in gains. They call it a ladder order on Bybit or other brokers out there, where I had 20 orders. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. All 20 orders, all the way up to about 46.6. Okay, all 20 of those orders actually got filled on my position, which allowed me to make about $17,000 on the long side. But due to the fact that this only moved down this much for my actual short position, I also had 20 grid orders open, and about 3 or 4 of those actually filled before it actually reversed to the upside. And then I moved my stop to break even, and then I actually got out down here prior to the actual breakout. So even though this short didn't even work out for me, I was still able to make $1,700 on this trade, which you can see my short on Bitcoin, I made $1,600, $1,674, and then the Bitcoin long that happened was 14,822. So the actual hold time for that short position was actually 8 days, 7 hours. The long position on Bitcoin was only 38 hours for the actual hold to make about $17,000 in total on those 2 trades. So all I'm really doing here is trying to identify where do a bunch of retail traders place their stops so that I can anticipate what's going to happen if those stops get taken out. Now, when it comes to breakout trading, I never chase. I never wait for a breakout to happen on an actual breakout. I'm looking for the anticipation of that move happening and getting in early and identifying that, okay, there are stops here. This is going to be a big move to the upside. Where's the profit target? Probably potentially up near this level right here where it just peaked out to the upside, but that was the actual opening and closing price of this actual candle, which was the ETF news. And now prices came all the way back up into my exact profit target, which is now a potential shorting opportunity. Now, we're not going to talk about that today. We can potentially talk about that on the next video. But what if we look at what's actually going on here from a Fibonacci retracement level? If we go from the top to the bottom, we can see prices coming all the way into the 0.786 Fibonacci level right around here, as well as this small little order block area. So this is actually becoming an area of high interest for a potential short, and an area where we might create the lower high, because we have the high here. Now we might create a lower high here. And if that does occur, this could be a nice shorting opportunity, because we would now create what is a potential new bearish channel that's actually forming up here. And you can actually see it coming into alignment here with the low, the high, the low here, the high here, the low here, and the high here. Now, the question is this going to be the top of this short-term bullish rally? We don't really know. We are completely overbought in fear and greed, but degenerate shift does have a little bit more room to run. What do you think is going to happen here on this Bitcoin trade? Is this the top? I just got out of my last long position for about, 16 or 14K on this trade, 17K in total considering the short. And overall, just 2 really great trades, from a failed short to a successful long, but both turned out to be profitable because I was able to anticipate where people are going to be placing their stops. Anyways, guys, that's a wrap for today's video. If you like this video, definitely like, comment, and subscribe. This is my brand new channel. I started over after building up my old channel all the way up to 450K, but due to some various reasons that I had no control, I started over a brand new channel. So I would love your support. Like, comment, subscribe, and I'll see you in the next one. I got a lot more stuff coming for you.